Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be looking at the main theme based on the questions that I get regularly asking when the best Bitcoin buying opportunity will be. So I'm going to be having a look at the signal that's just flashed, which may well be the best buying opportunity based on the historical context of the last 15 years. And as per usual, I'll be having a look at the wider markets to see exactly what the other markets are doing in the context of Bitcoin, as well as the 60-day cycle for Bitcoin to ascertain which direction the Bitcoin price may well be going in the coming days and weeks. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. Okay, so I'm going to be looking at the main theme of this video, and that is addressing a question which I get asked very often, and that is, when will Bitcoin present the best buying opportunity? And of course, the best buying opportunity, if you look at our default chart here, the best buying opportunity is always going to be at the bottom of a bear market. Here, 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 and the last time was at the 15,400 down here. So if you've missed that opportunity here, and along the way in the bear markets, and currently we are in a post-halving era, i.e. we're after the red line here. So these red lines are the halvings. So we've gone past that, and the question is, when is the best buying opportunity after the halving and before the expected parabolic move here? In every cycle after the halving we get this parabolic move, and currently we're waiting for our fourth parabolic move here. So as long as you believe that we're still in a bull market and we have this parabolic move and you've missed the bottom of the market, what is the main signal that I would take in terms of a buying opportunity? And there is one signal that has proved time and time again, one indicator that's always given us a very powerful buying opportunity after the halving. So if you've missed the bottom of the bear markets before, this particular indicator has proven its worth over the period of 15 years. And that is our good friend, the pi cycle. And if we go cycle by cycle, you'll see why it hasn't let anybody down. It's the best signal to get on board. And of course, everybody's got to make up their own mind. So if we go back to the first cycle here, this is the halving, the red line. So this is where we find ourselves in a post-halving era. And since the halving, if we look at the signs which prove to be the best buying opportunities in the past, then we can ascertain and deduce from that information what may well be the best buying opportunities in this cycle. So if we look after the halving in this area, how the price interacts with the green line here, this is a very good clue as to when the best buying opportunities may well be. So this is the first halving back in 2012. And let's say that at this green line, whenever the price hits the green line, this is when you dollar cost average into Bitcoin. So we can see that at that point here was at around about $10.75 and it fell down to $9.36. So that was a fall of around about 12%. Then it interacted with this price one more time here at $11. So let's say you dollar cost averaged at this point, and then you can see that the price fell one more time slightly below the green line, and then it came back up to the green line one more time here with a nice green candle here. And that just happened to be the last time before we went into this parabolic move at this point. And just imagine if you had dollar cost averaged around this green line, the peak from the green line was around about 23x. So you would have got a nice 23x from just there up to that peak there, which wasn't the top of the bull market, because if we look left here, we had another run to the end of 2013. But once again, if you missed that signal and dollar cost averaged at this green line one more time here and here and here and here, so these were your points to dollar cost average. And of course, from this point, the market fell about 37%, and from this point it fell around 12%. So as long as you're prepared to capture the whole of the rest of the bull market, this is of course the downside to this. But in order to get this, you do have to take a little bit of a hit along the line, because we're in a very volatile market. And in volatilities, you get downtimes, uptimes, downtimes, uptimes, downtimes. So if you're not prepared to do that, then you're more than likely going to miss these opportunities at the green line. Every time you hit the green line, If you would have just dollar cost averaged there one more time in the first cycle, if you average that out, let's say from about here, you would have got a 10x move and you would have captured the majority of the move here. And in the second cycle, the whole thing repeated one more time. We saw that after the halving, the price interacts with the green line multiples of times here. And if we have a close look at this, so if you dollar cost average at this point, the first time it hits the green line after the halving, so as long as you're prepared to hold some of the down times you're going to get, which is here at 15%, and then dollar cost average the next time we hit the green line, and after that there was a little bit of a fall there, and after the next time there was another fall of about 5% there. And if you dollar cost average one more time at this green line, then you would have been able to capture the whole of the rest of the bull market, which ended in December 2017. So in order to get the large part of the bull market, as you can see from here, if you would have averaged after the halving around the green line of the pi cycle, then from the green line to the top of the bull market in December 2017, that was a 31x. So once again, the green line was a great signal to capture the rest of the parabolic move here. And in the last cycle, after the halving, one more time, the price interacts with the green line about 2 or 3 times here. And in the last cycle, it didn't actually fall much below it at all. So just averaging around here would have given you up to the 64,000, the first top of the double top. That would have given you a 5x move from there, which brings us to the current cycle. So after the halving here in April, we can see quite clearly that the price action has been interacting with the green line on multiple times, much more than in the previous 3 data points that we've got, going back to the first halving in 2012. So after this current halving, let's say you average at this point on the green lines. So you had multiple opportunities here to dollar cost average around the green line. In the last cycle, it didn't fall much below it, but this time we've had nearly a 20% fall after hitting the green line. Then when we recaptured it here, we fell one more time down to that 49,000. We had another 23%. And then recently, when it came back down to the 52,000, we had another 17% fall. So being in a very volatile market, if you want to capture the rest of the parabolic move which we're expecting over here, if you want to capture that, then you may have to ride some of the price down on a few occasions. And as long as you've got the full cycle view of the market, at the end of the day, as investors, when we know that there is a 4-year cycle and we're hoping it will play out as it has done at the 3 data points that we have since 2010, if that is what it's going to do, then this may well be the best opportunity around the green line. So for those people who are looking for a buying opportunity, what we had last Friday, if we look closely here, I can show you that if you want to capture this bull market here, if this is indeed what we're going to get, as based on the historical context, you can see with this candle, we've recaptured the green line one more time last Friday. So last Friday, we recaptured the green line. So this presents, based on the historical context, this presents an incredible opportunity to dollar cost average in order to capture the rest of the bull market, wherever that's going to be and whatever the price is going to reach. And of course, as we've seen, that from the green line, we've had corrections along the way down here. But there will come a time when this correction won't come and the price will just move forward, leaving everybody behind. So the green line has proved over time to be an incredible buying opportunity for those who take an open, fluid and flexible approach in a very volatile market. And if you couple that with what we covered last week, the 4 simple moving averages, which were the yellow line, the white line, the red line and the green line, so that's the 20, 50, 100 and 200. We saw clearly that as soon as these 3 lines are actually lined up in the chronological order, that is when you get the parabolic moves. So this was after the first bear market here. Then the second bear market over here. Once these lined up, the 20, 50, 100 and 200, which was at this point here, that was the start of the parabolic move. Then in the next cycle here, once again after the bear market, all these lines get tangled up, but once they untangled themselves, which was at this point, just where the price was interacting with the green line of the pi cycle, that's when you get the parabolic move. And now in the current cycle, one more time, as I showed you here, Recently, we got the cross of the 100 that went above the 200 simple moving average here. So what we've got is a lineup of the 20, the 50, the 100, and the 200. And these are just all lining up now. And this has always been in the last 3 data points that we have. So dollar cost averaging at the pi cycle green line, and coupled with the signal of the 4 simple moving averages lining up in the chronological order prior to the big parabolic move, this gives the best chance to capture the rest of the bull market. Okay, we're going to have a look at the wider markets and what's happening in the wider circles to see how it will affect Bitcoin. So first thing we're going to have a look at is the target rate probabilities for the meeting that the Fed is going to have on the 7th of November. So that's the next time when the Fed will be meeting to decide on interest rates. The current rate is 4.75 to 5%. And the expectation at the moment is that there's 93% probability of a 25 basis points cut to between 4.5 and 4.75. So that would be a 25 basis cut from the current rate. So on this board, the probability for a 50 basis points cut isn't even on this board. The only comparison is with the interest rates remaining on hold at the current 4.7 to 5%. So this has changed quite a bit in the last week, where there was a 50 basis points possibility at 34% and a 25 basis points cut, which was at 65%, and the current rate was at 0%. So the 34% is now taken off the table. But this is moving very fast, and depending on the data between now and the 7th of November, that will give us a more realistic picture moving forward. If we move on to the liquidation heat map to give us the range in which Bitcoin in the short term, which Bitcoin will be operating in, at the top end we're looking at around about 64,300 here, and at the bottom end the leverage stops are around these levels here from 61.4 to around about 61.6. So around 61.5 is still a possibility if Bitcoin wants to take those leverage players out and their stops. So this is the range between 61.5, which is still on the table, and 64.5. And if we move on to the ETF overview, quite an interesting picture is emerging. As we can see with the BlackRock buying, they're having inflows of just over 2,000, which is far in excess of the bleeding from the Grayscale Trust in the last 7 days of only about 214 Bitcoins. And we can see that the red numbers are much smaller than the green numbers. So we can say on balance that the amount of inflows far exceeds the amount of the outflows in the ETF picture here. And if we move on to the dollar and have a look at the DXY, we can see that we have been making lower highs all along the way ever since we topped out here at 115 at the end of 2022. But as we've seen, we've had many counter trend rallies in between. And in the last few weeks, if you've been watching the videos, I mentioned that we've had a long period of a decline in the dollar and that we should be expecting some sort of a counter trend rally either here, which we've now got, or a little bit further lower. But despite the rise in the dollar, we can see quite clearly with the Bitcoin price, that's recovered from 52,000 to the current 63,000. And I've just marked up the 61.8, where this rally by the dollar is more than likely going to make another lower high along the way. So we've seen with these lower highs, this pattern seems to be on a downward trajectory. So we should expect really with a higher probability for the dollar to be coming up to this level here around about the 61.8 at around 103, 104. And if it goes to the 78.6, that's at the higher level of the 104. But somewhere along the line here in this region, we should expect some sort of a fall and for it to come back down to much lower levels down here. And that should give a lot of encouragement for the wider markets like Bitcoin to actually flourish. So the dollar is really setting up the scene for the Bitcoin price to thrive in the coming months or so. And of course we have the geopolitical situations, and these are events which are totally out of our control, and that may obviously affect the current picture. So we always have to take that into account, that with events being out of our control, anything can happen and the dollar may go much further than we anticipate. So always keep an open, fluid and flexible approach to these things. So in the absence of unexpected events taking its toll on the markets, we should really expect some sort of a return back to the downward trajectory for the dollar at around these levels at 61.8 and 78.6. And if we move on to the SPX to have a look at what the wider markets are doing, and what we've really got here is that we've had a triple top and broken through, come back and retested the old resistance here as a support, and now we're making our way to much further levels. The end of the current 60-day cycle framework that we've got here is around about the 29th of October. So we've got plenty of room now for the SPX to make much higher levels. We've already created a right translated cycle, which you'd expect in a bull market. So that's confirming that we're still in the bull market, the rising portion of the bull market. And this is the daily candle that we've got, which is a hammer candle. So that's telling us that there's a rejection of lower prices and there is a lot of demand coming in. So from this particular candlestick pattern point of view, we may well be moving to higher levels here. And if you look at the weekly chart, you can see on the SPX, we closed with another hammer candle one more time here. So it looks like with a higher probability for this to want to push much higher. And of course, if there are unexpected events going on in the world today, they may have something to say about that, of course. But in the absence of that, we should expect the prices to go much higher for the SPX. And if we move on to gold, we can see on the monthly time frame, this is just powering ahead. And this particular move that we've had since the bottom over here at the beginning of 2024, these are the monthly candles, and the current candle is the 9th candle from back here in February. And out of that, so far, we're having 8 green candles and only 1 red candle in between. And if you look in the gold history here on the charts, you'll find it very difficult to find such a big run anywhere along here with so many green candles all in a row. So we are getting quite an unprecedented big move from gold currently here. And moving on to silver, what we've got really is that we've broken out above the previous all-time high here. So we're just getting some resistance at this point, but it looks like silver wants to move much higher as well. We're making higher highs along the way and the higher lows. So with a period of consolidation, maybe a little bit of a pullback, we should see much bigger and higher levels for silver. And if we have a look at the Bitcoin 60-day cycle, it seems to be the same pattern with Bitcoin as it is with the SPX and the gold and the silver. So what we've got is a day 63 low here for the start of the new cycle, and that was at 52,000 here. And we've moved very strongly into the midpoint of this cycle. And as per usual, we've had a midpoint cycle fall, and this pullback was right at the support line here. So having broken above it at the 60.61, and what we've done is to make a new higher high for the first time over here. But this is the one that we really need to break in order to create a new higher high, and that's at 70,000. Because when you zoom out, we can see quite clearly on the 60-day cycle framework, so far the pattern seems to be the same, i.e. making a high here back at 73,800 back in March this year, then a new lower high, then we had a series of other lower highs here. So although we went above this particular high, we haven't really broken this trend line here. And this is what we really need to do, break this new high here to give us an opportunity to try and attack the 73,000. And the end of this cycle is on the 5th of November, around there. So we still have quite a number of weeks to firstly make the right translated cycle from the midpoint here. So if we can get above there, that would make another new higher high. And we're already making the higher lows here. So a lot of good signs for the Bitcoin price to move further ahead. So in the last 3 cycles, we can see that we haven't had a right translated cycle. So that was back in March. Then this one here, we failed to make a new high after the midpoint at this point because we topped out here. So based on that pattern, this would be the first new right translated cycle since the consolidation began over here from the beginning of this year. So this is the critical level here now. For a right translated cycle, we need to get above this candle here, which was exactly at 66,500. So this would make the first right translated cycle this year. And with the geopolitical situations unfolding around the world, we have to keep an eye on the crude oil futures here. And as we've been seeing, we've seen a very strong rise in the price of crude oil in the last week or so. And this can actually put the spanner in the works, because obviously with oil, this will always feed into the cost of goods. And if the cost of goods are going to be going up, and the expected interest rate cuts that we expect in November may not materialize if this continues to go much further up, as the inflationary pressures will then build up, and then cutting rates does not become very viable. So we need to keep an eye on this, because the markets are going to be driven by lower interest rate cuts coming up. And if they're not going to be there on the table, then it's obviously going to affect the markets, and obviously Bitcoin is going to be one of them. And finally, a look at the Bitcoin miners. So this is where the bull market started at the end of 2022. So from the bottom here, we got our first rally, which was around 212%. So the second time we came to this support line, we got a rally up here to 340%. And at this point, we fell below this trend line. And now we're trying to recapture it one more time. So as long as people have the narrative that we are still in a bull market, and if you look at all of the previous times when we've ever bottomed out, we always seem to get some very big moves to the upside. And this has happened time and time again. And this is a pattern that's been going on for several years. So what we are currently is right at the bottom of the pullback here, which we've had since the beginning of this year. So Marathon Digital Holdings topped out at about $34.50 here. So currently from those highs at $34.50, we've had a little bit of a jump from this level here. So at current levels, we're still 52% down, which means that the miners are presenting a 50% discount to their recent highs here. So judging by the previous historical context here, these are the times to get into the Bitcoin miners. And what we have here at Wisdom Bites, we have a private members section which covers the Bitcoin miners, which is dedicated to cover the Bitcoin miners. But please remember, the Bitcoin miners are an incredibly volatile area of the crypto space. So while you do get these big moves to the upside, you also get these big moves to the downside. We got an 84% just from this level here. So in the last bear market, many of the miners went down by 98%. And even in the bull market that we've had falls from here down to those levels of 64%. And the current one went down as low as another 61% here. So if you're not very good with volatility, then this is really not the area for you. But as the saying goes, you have to take the rough with the smooth. So if you want the moves from down here to up here, then unfortunately sometimes you have to put up with the moves to the downside as well. And that's just part of the territory we're in. But as you can see, the current situation seems to be presenting, on balance, a very good opportunity to move back to the upside. And this is a situation with all the miners. Should we get back to the top of the trend line that we've hit several times, from the current levels here to that trend line is going to be around about 300%. So we do expect this kind of a rally to materialize. And of course, the Bitcoin miners are a leverage play on the Bitcoin price. And if we zoom out, we can see that from the COVID situation down here, Marathon to the top of the bull market, well over 230 times, while Bitcoin in that same period to 69,000 went up by 16 times. So that was a 14x leverage play on the Bitcoin price. Obviously, nobody can guarantee that, but if that was to materialize, then the Bitcoin miners may well be presenting one of the best opportunities of a lifetime. And if you want to join us with the Bitcoin miners, then below any of my videos, you can see here there is a join button, as well as in the description box, there's a red button here. If the Bitcoin miners are of interest to you, then you can join us for the price of a coffee per week. So if you can sacrifice one coffee per week, you can join us with all the analysis with the Bitcoin miners that we do on a Wednesday and a Friday. So we have 2 videos every single week where we cover the Bitcoin 60-day cycle, as well as the wider markets, as well as the wider information that affects the Bitcoin miners. And we're also running a Bitcoin miners portfolio since the beginning of January 2023. So it's been running for about 20 months now. And we started off with about $100,000. And the current portfolio, which ended up at $434,000 at the end of 2023, and with the big pullback that we've had, we're still at around about $381,000. And this figure, which is the trading portfolio, where we do the ratio trades by moving from one miner to the other, just only a few weeks back, this was $720,000. So you can see how quickly and how volatile this market is. Just as quickly as we can move down from 700,000 to 300,000, as I've shown you with the charts, the next rally up should take this figure to much higher levels. And our target for the end of this bull market is $5 million. So if you want to follow the portfolio, join us with the Bitcoin Miners Club for the price of a coffee per week. Okay, I'm going to leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. And if you've got any comments, leave them in the comments below. Until the next time, take care, stay safe. And for all the Bitcoin Miners members, I'll see you on the message board when the markets open later on today. Bye for now.